So with that in mind, the report at 9:30 and the report due at 10, we said we will approach the market with care and caution. And like I said, usually if you're a very cautious trader, you won't trade at all before the report comes out, because the market tends to go trend sideways. But like I said, that my own trading plan is to make one attempt at the market prior to the report comes out in case the market trends. And that's my trading plan. So we can see when we started the day, we decided to either sell if the market breaks the pivot point. Excuse me. So the plan when we met at 6:30 was, if the market falls, we'll sell just below the pivot point. And if it trends up, we'll buy just above the first resistance. So that was our pending order this morning. And we can see at 7:20, the market took our buy order just above the first resistance. And once that happens, you make sure you then delete the pending sell order and only have one live trade before the report comes out at 9:30. So obviously once the market took our buy order, that kicked in a 20-point stop loss and a 60-point limit. And of course, the first target is, if the market moves halfway towards a target, we'll then move our stop loss to the opening level. Until it gets halfway towards your target, you don't move your stop loss. You give the market enough time to move, because you're happy to lose 20 points until that happens. And we can see here at 9 o'clock, the market went past the halfway mark. And at that point, you move your stop loss to the opening level. And at that point, you're not risking any money. And then you can see here at 9:15, you achieved your 60-point profit target, and that's the end of your trading for the day. So you can see that obviously it's always very important to have a plan. Always remember, it does not work all the time. You always have to remember that. You're going to have some good, some profitable trades. In fact, you probably have more losing trades than profitable trades. The key is consistency, discipline, and good money management. So now that we've reached our 60-point profit target, we'll then update our spreadsheet. Because like I said, once you achieve your target for the day, you stop trading for the day. Again, that's another important discipline lesson. You don't give back to the market what you've made today. Because every time you trade, you have a 60% chance of having a losing trade. So now that you've had a successful trade today, you stop trading. So we've made 60 points today, which is equivalent to £30, because we're trading 50p a point. So we're now up to £160. But again, it's not because we've made money. The key is that it was a good trading day, because we stuck to the trading plan. So again, remember, a good trading day is not because you made money, and a bad trading day is not because you lost money. A good trading day is the day you stick to your trading plan. If you stick to your trading plan, it's a good day, regardless of whether you made or lost money. If you did not stick to your trading plan and you made a lot of money, that's a bad trading day. So it's a question of you sticking to your trading plan. You can also make a note that the market trended prior to report coming out, prior to reports coming out. So again, you make a note of all these things, and you see, you can then make an objective assessment after a couple of weeks, a couple of months, and see which happens more often than not. We've already seen here that it trended sideways on 2 days prior to reports coming out. So just one day here where it trended prior to reports coming out. So obviously if you find it trends sideways more often than not prior to reports coming out, then you can then make your mind up whether you trade prior to reports coming out or not. But again, this is the importance of making notes, making comments, so you can then go back and reflect and make objective assessments of your trading. So that's the end of trading for today. We've made a profit target of 60 points. And like I say, once you hit your profit target, you stop trading for the day. And that's FTSE. Again, you see that sometimes the market can just take off prior to the reports coming out. So you can see the FTSE has gone past the first resistance. It's now at the second resistance. And it's just taking off. That's Wall Street. That's taking off too. So again, always remember that. Have a trading plan, discipline, and money management. Hi, Ola.
Hi, I'm wondering what happened to my